In this short video, I'm going to talk about buy-to-let property investing. Is it still worth it in 2021? Hi, my name is Mark Lloyd. I'm co-founder of Property Master Academy and have been a property investor since 2005. There's no question that over the past 5 years or so, investing in buy-to-let property has become harder. Why is that? Well, there's a number of things that have been implemented, some by the government, that have caused this to happen. The first one of those was the often referred to as the Section 24 tax that was introduced by the then Chancellor George Osborne. And basically what that does is it makes it less attractive for the portfolio landlords or anybody that's in the higher rate tax bracket to invest in property in their own name, because you're actually penalised for doing so. There's also increased licensing. More and more councils are looking at licensing buy-to-let properties. Now, this happens already in other areas of the UK, such as Scotland and Wales, but it hasn't really been implemented in England. But I think that's going to change over the next couple of years, and so there'll be a licence fee to pay if you have one property or if you have 100 properties. It doesn't matter, there'll still be that licence fee to pay. Another thing to bear in mind is that arrears are at an all-time high. Don't forget, over the past year we've had the pandemic, so there's been a lot of redundancies and of course the furlough scheme, and that furlough scheme is going to end in September, so I expect arrears to start to rise again at that time. Of course, from a positive point of view, rental demand is up in most areas of the country apart from London, so it's still proven to be an attractive investment. You've also got that long-term capital appreciation and of course the potential to get an infinite return through the BRR model. Now, I've talked more about the BRR model in another video, but in essence, what we're looking at with the BRR model is to buy property from a motivated seller at a discount, renovate, refurbish that property, add some value, rent that property out, refinance it to pull your money back out, and repeat the process. Now, if you can do that, then buy-to-let can become an extremely attractive investment. And in fact, getting an infinite return is still possible. And by that, what I mean is when you refinance, you're extracting all of your initial capital, your deposit, your costs, and your refurbishment money. So it makes buy-to-let an extremely attractive investment if you can do that. But what if you're getting 10, 20, 30, 40% returns? These are also possible and much, much better than you get in the bank. So it is still an attractive investment from that perspective. However, there are a few things you need to do to make it attractive for you. Firstly, form a limited company. It is no longer attractive unless you're a basic rate taxpayer to purchase buy-to-let properties in your own name. Now, you should seek professional advice on this from a property accountant. I can only give you some general views on this. But to purchase property in a limited company gives you additional tax breaks as well as much more flexibility for legacy planning and so on. But buying in your own name is only going to work if you are a basic rate taxpayer. Now, don't forget, rental income is added on to any salary you may currently be earning, so if it's going to push you up into the higher rate, then it's not going to be attractive for you at all. If you're already an existing investor and property is your only income, then it may well be you're only in a basic rate tax band anyway, so that's still attractive for you. Secondly, learn about buy-to-let. Learn about the rules and regulations associated with it. They are increasing, and I think regulation is a good thing. I think regulation gets rid of all the poor landlords and means that those who want to treat it professionally as a business can do. Thirdly, pay attention to tenant referencing. Now, whether you do this yourself or it's done through a letting agent, it's one of the key things, obviously, of getting a good tenant into your property. Now, as the market changes and we get more redundancies and the furlough scheme happening, that's going to become even more important. I'm not saying just because someone's been made redundant, they're potentially a poor rent payer, but there are considerations that you need to bear in mind. And lastly, in my view, if you are going to do property investment through buy-to-let or any of the other strategies, then take it seriously and treat it as a business. I hope you found this video useful. If you have, please hit the like button, also subscribe and hit the notification bell so you get notified of other videos as and when they're put up each week. Appearing on your screen right now are some of those which will help you on your property journey. Thanks for listening.